Warren Buffett's investment journey. Learn how the legendary investor started investing. Ladies and gentlemen, today, we begin with a powerful quote from the legendary investor Warren Buffett. Be fearful when others are greedy and greedy when others are fearful. Welcome back to our channel, where we uncover the fascinating stories of brilliant minds that have shaped our world. In today's video, we delve into the captivating tale of Warren Buffett, the financial genius. When it comes to the world of investing, few names stand out like Warren Buffett. Known as the Oracle of Omaha, Buffett is widely regarded as one of the most successful investors in history. His wealth and expertise have made him a role model for aspiring investors worldwide. In this video, we will delve into the fascinating story of how Warren Buffett started investing, exploring the key moments and strategies that propelled him to become the legendary investor we know today. Early influences and passion for investing. Our story begins in Omaha, Nebraska, where Warren Buffett was born in 1930. Warren Buffett's journey as an investor began at a young age. Growing up in Omaha, Nebraska, he developed an interest in business and finance from an early stage. One of his biggest influences was his father, Howard Buffett, who was a stockbroker and later served as a congressman. His father's profession exposed him to the world of investing and taught him the importance of sound financial principles. Buffett first invested in stocks on March 11, 1942. On that day, he purchased 3 shares of Citi Services preferred stock. Their cost was $114.75 and required all of his savings. The Dow Jones Industrial Average that day closed at 99. Education. Despite the Buffett's wish to skip college so he could immediately start his business career, Buffett enrolled at the University of Pennsylvania's Wharton Business School at the age of 16. He would eventually transfer and graduate from the University of Nebraska in 1950. Buffett then attended the Columbia Business School in New York to work toward a master's degree in economics and to study under famed investor Benjamin Graham. The power of compounding. A crucial concept that shaped Buffett's investment philosophy was the power of compounding. He recognized that by reinvesting the returns earned from investments, one could generate exponential growth over time. This realization formed the foundation of his long-term approach to investing, which focused on buying and holding high-quality companies with solid growth prospects. Mentorship under Benjamin Graham. One of the turning points in Warren Buffett's investment journey was his time studying under renowned investor Benjamin Graham at Columbia Business School. Graham's value investing principles, emphasizing the importance of buying undervalued stocks, deeply influenced Buffett's investment strategy. Buffett once famously said, "The basic ideas of investing are to look at stocks as business, use the market's fluctuations to your advantage, and seek a margin of safety." The birth of Berkshire Hathaway. In 1962, Warren Buffett began accumulating shares of a struggling textile manufacturing company called Berkshire Hathaway. Although the textile business eventually faded, Buffett transformed Berkshire Hathaway into an investment holding company. Over the years, he used the company's capital to acquire significant stakes in various businesses, building a diverse portfolio that contributed to his immense success. Embracing long-term investments. Warren Buffett's investment approach is characterized by a long-term perspective. Unlike many traders who seek quick profits, Buffett looks for companies with enduring competitive advantages and solid management teams. He believes in holding investments for the long haul, allowing compounding to work its magic over time. This patient and disciplined approach have been instrumental in his ability to generate substantial wealth. The Berkshire Hathaway Annual Shareholder Letter. One of the unique aspects of Warren Buffett's investment journey is his annual shareholder letter. Each year, Buffett shares his insights, wisdom, and reflections on investing and the economy in an open letter to Berkshire Hathaway shareholders. These letters have become a treasure trove of knowledge for investors, offering valuable lessons and guidance on various aspects of investing. Warren Buffett's investment principles and general tips. From now on, let us introduce some of the Warren Buffett's famous investment principles and general tips. General tips by Warren Buffett. On earnings, never depend on a single income. Make investments to create a second source. On spending, if you buy things you do not need, soon you will have to sell things you need. On savings, do not save what is left after spending, but spend what is left after saving. On taking risks, never test the depth of a river with both feet. On investments, don't put all eggs in one basket. On expectation, honesty is a very expensive gift. Don't expect it from cheap people. Warren Buffett's 7 best investing tips. Invest in what you know, and nothing more. Never compromise on business quality. When you buy a stock, plan to hold it forever. Diversification can be dangerous. Most news is noise, not news. Investing isn't rocket science, but there is no easy button. The best moves are usually boring. My favorite Warren Buffett's investing tips. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. The most important quality for an investor is temperament, not intellect. The stock market is a wonderfully efficient mechanism for transferring wealth from the impatient to the patient. Market fluctuations are your friend, not enemy. Warren Buffett's charity activities and net worth. Despite donating roughly $48 billion to charity since 2006, Buffett's net worth continues to swell overall, topping $117 billion as of June 2023, fifth wealthiest person in the world. Meanwhile, Berkshire Hathaway stock is currently valued above $515,000 per share, with a market value over $740 billion, as the company's portfolio represents a cross-section of the U.S. economy and includes some of the world's most high-profile companies, including Amazon, Apple, American Airlines, American Express, Coca-Cola, Procter & Gamble and General Motors. Conclusion. Warren Buffett's journey as an investor showcases the power of knowledge, discipline, and a long-term perspective. From his early influences to his mentorship under Benjamin Graham, Buffett's investment philosophy has been shaped by timeless principles. By embracing his approach of investing in quality businesses and allowing compounding to work over time, investors can learn valuable lessons and strive to achieve success in the world of investing. While Warren Buffett's path may not be replicable in its entirety, understanding his journey provides inspiration and guidance for individuals seeking to make their mark in the field of finance.
This is a brand new channel. If you find any values from this video, please subscribe and like.
Your support will help us to stay motivated and keep this channel running. We are committed to providing you the best possible service.